All right, let's take a look back in history. On this day, 1991, the New York Stock Exchange began a 2-year pilot project to let stocks trade for as much as 75 minutes after the normal 4 p.m. closing time. It was an all but revolutionary departure for the then 200-year-old institution that had been fiercely wedded to past traditions that by the 1990s were at odds with a more dynamic and more global era of stock trading. At the time, the NYSE's dominance of U.S. market listings was being chipped away by the 20-year-old upstart NASDAQ market. It was also losing business to overseas bourses, which carried listings for hundreds of U.S. stocks that by default could be traded well beyond the parameters of the normal U.S. market hours that run from 9:30 a.m. to 4 p.m. here in New York. Now, extended trading, it wasn't initially well received. There was concern about less data transparency, concern about undermining links with regional exchanges, concern that the electronic underpinnings of after-hours trading would cut out the human middlemen who made their living walking those exchange floors. The biggest concern, though, was whether traders would actually take advantage of the extra time. In the first ever after-hours trading session on this day in 1991, only 737,000 individual shares traded and 1.6 million additional stock basket shares. Within a month, those numbers had actually dropped by 2/3. Charles Schwab telling Bloomberg at the time that just 30 to 50 of its 1.5 million customers were even using the system. But of course, with the benefit of hindsight, we can see that the NYSE's move was a smart one. And that brings us to our question of the day. How many shares typically trade in the after-hours session now across the tape? The answer, more than 100 million shares swap hands on a typical day. And it's a reflection of a changed world where financial markets are more global, where electronic trade fulfillment is preferred over the human touch, and where not even bankers keep bankers' hours anymore.